Hey guys, welcome to another episode of the SuiteLife Multifamily Investing with Peter and Anna. Really excited about this episode. We're going to talk about 3 things that you need to look for when you're evaluating your next passive multifamily investment. So let's kick it off. All right, so number 1, the first thing that you really need to look for is location. You know, in real estate, location is so important, and it can't be any more important, and even more important in multifamily investing. So the first thing you need to look for is population growth. You want to make sure there's population growth. The second thing is job growth. And the third thing, demographics, the complex that you're going to be investing in. So hopefully your sponsor has already kind of looked at this and made sure that they're investing in an area that has growth, population growth, job growth, income growth, and making sure that within the 1 mile radius, the income can support the rent increases at that apartment complex. So in the apartment industry, we generally look for incomes 3 times the average rent. So say, for example, we're going to raise rents to $1,000 at this apartment complex. We want to make sure that the average demographics and income within the area can support that, and they make at least $3,000 a month or over $36,000 a year within this area. All right, so that's number 1. So let's move on to number 2. So the second thing that you really want to look for is what are the assumptions that are going into the underwriting. And so one of the big things that can really change the total returns of a deal is the organic rent growth assumptions. And so to be conservative, what we do is we would assume that in year 1, rent growth is 0, organic rent growth is 0. And then in years 2 through 5, we use data from industry sources like Axiometrics, RentPath, CoStar, and then we kind of take it down a little bit. So instead of projecting, say the industry projection is 5%, we might project 4.5% or 3% in years 2 through 5. And the reason this is really important is, like I said, organic rent growth projections have a compounding effect. And so this just by changing it 1 or 2% each year, change the total return numbers from, say, 60% to 120%. So this is a huge lever that I think passive investors need to understand and look for when they're looking at their next deal opportunity. All right, so the third one has a large impact on the total returns is the exit cap. So make sure that your sponsors are being conservative with the exit cap that they're assuming. So the lower the exit cap, the higher the total returns. The higher the exit cap, the lower the total returns. Generally, what we do is we'll take a look at a sensitivity, a range of exit caps. We might be 50 basis points higher than our entry cap, but this kind of gives our investors an opportunity to take a look at what is the range of potential returns on a deal. So that's it, guys. Those are 3 things you need to look for on your next passive investment opportunity. All right, so if you guys are interested in learning more, visit our website at SuiteLifeMF.com and subscribe to our YouTube channel to get more information on passive investing in multifamily.
Thank you for watching this video. We hope you truly enjoyed it. If you are interested in future investment opportunities, sign up for our newsletter on our website at SuiteLifeMF.com and schedule a time to meet with us. We want to learn more about your investing and financial goals so we can make your dreams a reality.